traders at Axis Bank say investors are sticking to the long end of the T-bills curve as attention shifts to today's CBN bi-weekly retail SMIS auction. Eki Teddy-Onaghise, Treasury Sales member at Axis Bank, now joins me for more market updates. Thank you so much for joining us on the show today, Eki. This is the last trading day we have for the month of March. Take us through the activities that shaped up the month, the highlights, and just the play out of investor sentiment this week as well.
Okay. Thank you for having me, David. So for the month of March, we've seen illiquidity persist in the market. So particularly this week, we had seen that the week opened at a debit of about over 500 billion, which spiked the open repo and the overnight rates above 18% levels. As at close of business yesterday, the rates had the liquidity in the market had dropped to improved rather to about 200 billion debits. This was improved by the inflows of FAC, which was by 410 billion. Also some coupon payments of 135 billion and some home maturity of about 40 billion. So this liquidity had flowed into the fixed income markets, where we saw a quiet market on the bonds and well, we saw a quiet session in the bonds market. The activity was skewed towards the long end of the curve, and we also saw the release of the bond calendar, where they swapped the maturities of 37s and 39s to the 42s and the 50s maturities. On the fixed income market as well, the DMO conducted the
Okay, now playing pundit at this point in time.
A Treasury bills auction where they had 145 billion on offer across the standard tenors. At the end of the session, we saw the rates come out close at 6%, 8%, and 14.7%, which was an increment of the last session. Currently, at the long end of the curve, the one-year bill is currently trading at 12% levels. Also, in the FX markets, due to the illiquidity and the plan for the scheduled CBN retail SMIS auctions today, the illiquidity still persists in the markets. The I&E and the NAFEX rate closed circa 461.5 levels as well. So going into next week, we don't see any improvement in these rates. We don't even see any serious liquidity impacting the system. So we think that these rates will continue to hover around same levels next week.
And talking about investor position, like you've also mentioned, the market has been illiquid for quite a while now. How do you see investors responding to or taking their positions ahead of the second quarter for the year? Eki, can you hear me? I'm asking, where do you see investors lying as we are making forecasts for the second quarter of the year? We're already done with the first. Well, that was Eki Teddy-Onaghise, Treasury Sales member at Axis Bank.